So here's some of the really impressive historical numbers from Asos. So we've got, hi everyone, Andrew here. So for those who have been following Asos along, you will know that it has been crushed on the stock market. Is there something fundamentally wrong with the company? Whether you are an Asos shareholder or just someone interested, hopefully I can help shed a little light on the situation and give my thoughts on the company. So Asos is down 72% in little less than a year. That is intense. The air has definitely come out of this stock, and it can be attributed to these things. 1, it was overvalued. 1 year ago, the valuations were not in line with the reality of the business. I guess people were thinking the pandemic boom was going to propel Asos at a fast speed, and when the numbers started to slow, well, the valuations were just too high. Typical stock market behavior, and we all know this. Number 2 is, in October, the CEO stepped down effective immediately. This was a shock to the market as the CEO had been at the company for over 10 years, and half of which as the CEO. There is still no replacement CEO as the time of me making this video. So turnover of management just gives uncertainty to investors. So I understand a pullback due to this. I think management is a really important aspect of all my investments, and not knowing who the leader is going to be, well, that is uncertain. The third thing was Asos guided revenue to be somewhere between 10 and 15% for 2022, rather than the expected 17%. They blame this on the supply chain issues, which hopefully will be resolved by the second half of the year, but analysts just didn't like the lowering of the guidance. Plus, in the most recent quarter, they only grew at 5% overall, but the UK and the US segments grew at 13 and 11% respectively, despite the supply chain issues. So it was actually just Europe and the rest of the world segment that pulled their growth down. Also, 2020 shopping online was just boom time numbers. To grow of this at all, I think is impressive. There were just a lot of short-term issues like supply restrictions, increased shipping costs, and there was more COVID issues. So I see most of these things as short-term headwinds rather than long-term damaging issues. Now, Asos is actually on the London Stock Exchange, so your broker will need to access that market to trade there. Now, I use Interactive Brokers as my platform, as the fees are really low and I have access to international stocks. Yes, I know there are free commission brokers out there, but I just don't think they're super safe, as they haven't been around for very long and they don't really give you access to international markets like the London Stock Exchange. So with the link in my description, you can go and get a demo account and take a look around and see if you like how the platform looks. I've also got videos here on my channel with demonstrations of how to buy and sell things anyway. Okay, so now let me go through the things I'm happy with, then I'll go through the things that I don't like. So I like the revenue. Historically, it's been really good, and in the future, I think growth is going to be fine. Now, gross margins. I think these will be fine. Plus, this scaled economy shared business model is good long-term thinking. It reminds me of Amazon and Costco, and I get why Nick Sleep likes it. Debt levels, well, they're fine. They built up some cash in the bank, and almost half of their debt is capital leases anyway, which is more of an expense than a debt, I think. Anyway, no issues for me here. With free cash flow, it's in line with revenue, and I think it'll be fine. Insider ownership, well, the co-founder still has 3% stake in the company. He has sold about 20% of his stake recently at about £22 a share, but I'm not going to read too much into that. Then return on invested capital, and that long-term has been great and looks set to continue long-term at about 20% is what it's been doing. I think there's lots of growth potential, lots of green space, and the world fashion market is obviously huge. Management hitting targets, they've been doing this in the past, and I see no reason why they won't hit them in the future. And the super investor in this one is Nick Sleep. Now, regarding their competitive advantage or their moat. So we've got the scaled economy shared, and this is a fantastic competitive advantage. This is when the savings made by the business, as they reach bigger and bigger scale, they pass these savings on to their customers, just like Costco and Amazon. It is a great way to build customer long-term loyalty. And we have data that goes back now more than 15 years, and that shows this great long-term compounding growth in their financials, and that's because of this business model. Their net promoter score is 40 compared to Boohoo at 0, and Zara at close to -100. So customers do like them more. Now, something I did also notice in my research was that they're the 419th biggest website in the world. They're 96th biggest in the UK, but that's actually down 22 places. Even with this, I think it has a durable and growing competitive advantage, and we can see it in the numbers. Now, regarding price. I think it looks good enough to start a position using conservative assumptions and a 22% discount rate. The stock price at the moment is about £18 per share, so you'll have to check when you're watching this video what the price is. Now, if you want to see all the companies that I follow on my watch list with up-to-month buy prices, fair valuations, and what I think the price appreciation potential could be, well, sign up to my e-magazine called Undervalued. I release a new version on the first Wednesday of each month. It's only $10 a month, and I hope it provides far more value than that for you. You can check out my February edition for free if you want to see what it looks like and what you can expect. There's a link in the description, and I'll be updating Asos in that. So here's some of the really impressive historical numbers from Asos. So we've got the net income 10-year average doing 28% per annum. The book value 10-year average is at 30% per annum. Revenues for the 10 years is 27% per annum. Operating cash flow for the 10 years at 30% per annum. I think they've also got a really strong brand. Asos has become this household name in the UK. Even just some anecdotal evidence from my UK friend Ed. He told me by just looking out the window, well, every package in their mailboxes are either Amazon's or Asos. People just go directly to the Asos website rather than have to be enticed there by advertising. All right, so some of the things I don't like is firstly share dilution. In 2022, share dilution hopefully was just a one-off. Management said it was to shore up the balance sheet in the unknown COVID times. I just don't like it. I would prefer them being a little bit better prepared, which I think they are with building that cash balance up over the last 12 months. I also don't like the fast fashion industry from an environmental point of view. Clothes made in sweatshops in Bangladesh, all the fuel used to ship it to the customer, and trends only lasting one season. I will dig into their environmental policy to see if I think they are doing enough, but it doesn't sit very well with me. And the industry they're operating in, well, it's just a really highly competitive industry. There's some big names in the space. We've got Boohoo, Zalando, Zara, H&M, Mango, and all the thousands of smaller boutique fashion retailers. Asos has a big competitive advantage with their scaled economy shared business model and thinking of putting the customer first. So I think they are the best by far in the space. But because it's so competitive, they need to be the best. And this will help them grow further into a fragmented market, but there's just still a lot of options for their customers. Now for some risks. Now, they are still making mistakes in the US with their supply chain issues. 2019 was actually really ugly. They had the wrong product mix, so sold out of some stuff that was popular and had too much inventory of things that didn't sell. It was a mess and it cost the business a lot of money. And if they can't maintain supply and demand balance, their model will actually fall apart. The next thing is whether the new CEO is going to fit in. And what about the incentives for this new CEO? Will they align with this scaled economy shared business model? It's a big question mark. Now, the founder did sell 20% of his stake in the company back at £22 a share, and selling could be for a range of reasons. So I don't want to take this as a sign of anything. Look, buying would be a stronger signal. There is only really one reason someone buys shares, and that is because they think it's a good investment. They could sell for any reasons. They could be donating money to charity, paying for private school fees, building a house, tax reasons, I don't know. Lots of reasons to sell. There's really only one reason to buy. Anyway, not sure about that one. Now, a big shout out to Hamish for the work he's done on Asos. I highly recommend going through his course, and there is a deep dive into Asos, and that will explain everything in far more detail. But overall, I really like Asos. Sure, it's not perfect, but I do think it might be a better business than some of my other investments. So I'm going to think about rotating away from some of my investments into Asos. I'm still thinking about it anyway. But honestly, it's really hard when I just want to put all my money in Naspers and Prosus, but I need to diversify just a little, and I like finding great companies. I think Asos could be a long-term compounder, and I would be getting in at a pretty good price. Now, a quick shout out to Potato Frogs. You always have great comments, interesting things to add. I appreciate the effort a lot, and you are a legend. Thanks for staying to the end, and I'll see you in the next video.